Welcome to this week's African Agri Overview. This week we'll be focusing on the latest news in the Tanzanian maize market, as it is a pivotal non-GM maize market in the East and Southeast African regions. All in this week's episode, so make sure to stay tuned. Hi, I'm Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview. Before we dive in, however, I'd like to encourage you to follow us on YouTube. By doing so, you'll gain access to regular insights into the agricultural markets of Africa. Our goal is to provide you with valuable information that can help you navigate the dynamic world of the African agricultural environment. You can also contact our regular market analyst, Jacques Pinaar, for more detailed reports on the African soft commodity markets. But with that said, let's focus on the latest news in the oil market. Brent oil prices have once again hovered around the $87 mark the past week, and we see that there's a lot of resistance at these price levels given the current economic climate. There is still low demand from China, but production limitations by OPEC, Saudi Arabia and Russia are still supporting prices. The latest price traded on $86 per barrel. Jacques will now tell us more about the latest news in the Tanzanian maize market. Over to you, Jacques.
Good day. In this week's podcast, we revisit the Tanzanian maize market. As indicated before, we believe the two pivotal non-GM maize markets in the East and Southeast African region are Zambia and Tanzania. If these two markets produce healthy exportable surpluses, the region is usually sufficiently supplied. If not, the region is usually in trouble from a supply perspective. Zambia is typically the supplier to Malawi, the southern DRC, Zimbabwe and Botswana. The Tanzania surplus usually flows to Kenya, Rwanda, Burundi and the eastern DRC. Note, all numbers used in our graphs are our best estimates given information at our disposal and should be seen as such. In particular, there is very little statistics available on Tanzania crops. Let's recap the two annual maize crops Tanzania produces. The short-range crop plants October and harvests March, April and normally yields about 15% of annual supply. The long-range crop, the main crop, plants February, March and harvests July to September and normally yields around 85% of annual supply. This graph illustrates our Tanzania annual maize balance sheet estimates since 2020. We have recently made one adjustment to our 2023-24 forecast. We have increased our export estimate from 500,000 tons to 700,000 tons. For the last 2 months, Tanzania has been supplying most of the Kenyan demand, and this is likely to continue until late September, when the Kenyan main crop should commence harvesting. Kenya on average consumes around 300,000 tons per month. Although Rwanda is a much smaller market, they will to a large extent also rely on Tanzanian supply from now until late January. By March, April 2024, Kenya should be back in the import market, but we are not sure if Tanzania will have a sufficient exportable surplus at that point. As indicated before, when Tanzania has a deficit, which is not that frequent, it normally imports from Zambia. For the current season, we have penciled in imports of 400,000 tons. However, Zambia will not necessarily have a sufficient exportable surplus to meet the Tanzanian import need by Q2 2024. Even with our import forecast included, we do not expect Tanzania will have significant ending stocks mid-2024. We expect another very tight balance sheet year, following a similar situation last season. 2022-23 ended without ending stocks, and we expect a similar scenario for 2023-24. The next graph illustrates the Tanzanian maize price history. The circle indicates prices during their main crop harvest period, July to September, since 2018. July to September 2022 was an anomaly to the upside, driven by an extremely tight balance sheet. See the red circle. We are currently mid-harvest for the 2023-24 year main crop and prices are on similar levels compared to last year's outlier. See the dotted red circle at around $370 to $400 per ton in Dar es Salaam. It is quite possible the $500 a ton level could be tested again by March-April next year, as was the case earlier this year. March-April is the typical lean period for the Tanzanian maize season. Usually the short-range crop brings some supply relief from May, which normally lead to softer prices. To make a price trend forecast for the next 6 months is extremely risky. However, the general market opinion is we could be close to the bottom of the current price cycle and prices could trend higher from late September when the harvest campaign should be completed.
Thank you very much, Jacques, for sharing such valuable insights. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jacques Pinaar. I'm Dr. Johnny van der Merwe and thank you for watching.